Karina Huber updating us on the Alibaba IPO. And joining us now from Chicago is Joseph Schuster. He's the founder of IPO Schuster. With more, Joseph, thanks for being on the show. Good to have you.
Hello.
Alibaba shares pricing at $60 to $66 a share. That's on the lower end of the spectrum in terms of pricing. Some analysts who spoke to believed that Alibaba would price at between $95 and $100 a share. This is seen as quite a conservative pricing move. Now, as Karina just reported, keeping in mind that the initial price range of an IPO can be adjusted higher or lower as the market conditions change and as investment bankers have an opportunity to measure investor interest. Do you think this is all a way to lure in more investors? What's behind this?
I think Alibaba wants to leave a good taste in the investors' mouths initially. Obviously, it's a very large deal, and as the larger the deal, the more discounts the company needs to give. You need to attract large institutions to get the deal done. It will attract sovereign wealth funds as well, I hear, and obviously they deserve a discount to get in with large amounts of money. And obviously, you want to have the share trade up in the aftermarket of such a significant offering and not down afterwards.
So do you think the lower pricing is intended to avoid the risk of not having sufficient aftermarket demand, as was illustrated by Facebook?
That's correct. I think Alibaba definitely wants to avoid what happened to Facebook. With Facebook, it's a big crash in the share price afterwards. Obviously, Alibaba does not want to have that happen in the same way again. And obviously, it's all in the medium to long run interest of the initial shareholder.
Right. Well, according to the New York Times, the Investor Roadshow will consist of around 100 meetings over the course of 10 days, and it's going to kick off here in New York on Monday. What is the top message Jack Ma needs to convey?
Top message is that we are here to grow. We are here to grow exponentially. With our company, you can get access to markets you just cannot get with eBay or Amazon. And we are your diversification play into global growth and e-commerce.
Joseph, Jack Ma released his letter to investors today. Was there anything in it that you found particularly compelling?
Well, I find compelling the growth story of the company. It's trading, at still 17 times sales, but the growth forecast is very, very strong. It really makes a distinguished investment when compared to Amazon or eBay and so forth. And I think that's a big message of the IPO, that it will enable you access to a market where you just don't have access to right now.
Joseph, certainly a lot of growth, as you mentioned, in Alibaba's latest earnings report. Sales in the second quarter rising 46% to $2.5 billion. Net income nearly tripled to just under $2 billion from the year before. Alibaba also showing strong growth in mobile. Why would anyone not buy the stock? Can you give me one reason why this is not a good buy?
It's an expensive stock, 17 times sales. By any means, it's expensive. It's going to be a high beta stock once the stock market overall gets into a high volatility. The stock may actually trade downwards. But I guess valuation may be one concern here.
Well, there's going to be a lot of liquidity in the IPO, so can we expect lots of institutions to participate?
The offering is here to sell to institutions. I don't believe the focus is to sell the stock to retail investors. The focus is pension. The focus is medium-sized, large institutions and sovereign wealth funds. As I hear, there's substantial interest from sovereign wealth fund to participate in the IPO.
But if you are a retail investor and you want to get in on this Alibaba action, what is the guidance you can offer the retail investor with regards to jumping in the first week, in the month? Are there any points that you would recommend?
Make Alibaba part of your asset allocation. If it goes down, don't sell it. Just keep it over long term, over 3 to 4 years. Include it as part of your diversified portfolio. Then you may actually, get the upside of Alibaba, which is, promising and hopefully delivering on its growth story. But don't trade it over the short term, hold it over the medium to long run, which means up to 4-5 years.
All right, so it's a long hold in the stock. Now,
Yes.
in terms of the competition, does this IPO put them in a more precarious position?
Well, maybe with the gross proceeds being around 10 billion going to the company, it's potentially able to buy some of its competition, but obviously in such a market with such a high velocity such as e-commerce, there's always the threat of new entrants. But obviously right now you have to give Jack Ma the benefit of the doubt that he can be able and he will be able to withstand the competition going forward, which actually can come from domestic China as well.
Okay, thank you for your insight. Always a pleasure. Joseph Schuster, founder of
Thank you.
iPox Schuster.